Hello and welcome back to a demo video. Um, your homework is problem 11-15, and they ask you to calculate return on investment and residual income. And they give you a balance sheet, and they also give you an income statement. So what I did was I kind of set the problem up exactly like like your homework problem. Okay, so we have our assets, our liabilities, and our income statement. So, number one asks for the company's average operating assets for last year. Okay. So, in order for us to do this, we need to recognize what are our operating assets. Well, those are going to be things like cash, accounts receivable, inventory, plant and equipment. Okay. We have an investment in another company, something totally different, not a operating asset. We have land that's undeveloped. That's really an investment for the company. Okay. So to figure out what our operating assets are, what our average operating assets are, I'm going to start with my beginning. And I'm going to type in a column for ending. So what I'm going to do is I'm just going to go ahead and say, okay, what is the value of my operating assets for the beginning period? Well, I'm going to take my cash plus my accounts receivable plus my inventory plus my plant and equipment net. I get 3,180,000. I'm going to do the same thing for the end, okay? I'm going to take, for the ending period, I'm going to take my cash plus those receivables plus the inventory at the end of the period plus my plant and equipment net for the end of the period. I add all those up, I get 3,300,000. So to figure out what the average operating asset is, I'm going to add my beginning operating asset value plus my ending operating asset value, and then I'm going to divide these by 2. So I see that the average operating assets are 3,240,000. And that's the answer for 1. So, excuse me, when your homework asks you to calculate the average operating assets for last year, you just need to know, what are my operating assets? Well, I got to add cash, accounts receivable, inventory, plant and equipment within a specific period or the beginning balance. Do the same thing for the ending balance, add up those assets. You get your totals. You add your totals up and divide by 2. So not too difficult, okay? Number 2 wants us to calculate margin, turnover, and return on investment. So, what we're going to do is first calculate what is our margin. And if you remember from the lecture, we said that to calculate the margin, we take the net operating income and we divide it by our sales. Okay, so we can do that pretty easily, right? We have down here our income statement. We have our net operating income, which is our $610,000 in this example. And we divide that by our sales, which in this case, it's 8,100,000. I'm going to turn this into a percent, take it out 2 places, and we see that our margin is 7.53%. The next thing we need to figure out is, what is our turnover? So to calculate turnover, remember, we take sales and we divide that by our average operating assets. So we already have our sales, right? We just pluck that off of our income statement. And then we divide that by the average operating assets. Well, guess what? We already calculated that in part 1. So I'm going to plug in my answer from part 1, which is 3,240,000. I end up with 2.5. So how do I figure out what my ROI is? Super simple, right? Now, to figure out what my ROI is, remember there's 2 ways to calculate it, right? The problem asks me to calculate the margin and to calculate the turnover. So we can assume, and it's a pretty safe bet, that they want us to calculate the ROI by factoring in the margin and the turnover. So I'm going to say that to calculate ROI, I'm going to take my margin and I'm going to multiply that by my turnover. So if I take my margin of 7.53% times my margin, which is in cell reference G18, forgive me, my margin times my turnover, and I see that my ROI is 18.83%. Okay? So the third thing asks for residual income. Okay? So remember that they tell us that we have an investment in a company, this Boosin SA, right? I just took the same name from the problem we're working in here. That is on our balance sheet, and it is right here, okay? We need to figure out what is our average, or what is our residual income, right? So basically, the problem tells us that the company requires a minimum rate of return of 15%. Okay? 15% on its operating income, or its operating assets. Okay? So what we're going to do to calculate residual income, we're going to take our net income and we're going to subtract out our we're going to subtract a percentage, or actually we're going to subtract out the required minimum return. Okay? So we already know what our net income is. Our net income, 90 grand, right? So we need to figure out what is our required return, or required rate of return. That's easy for us to figure out. To figure that out, we know what our average operating assets are. We need to multiply that by our required rate of return, which is 15%, or 0.15. We could see from this that we are in the hole, right? Because our required rate of return is 15% of our average operating assets. Okay? Now, let's say that we changed, so we have a negative here. We have negative residual income. Okay? So let's say, what if we change and the company says, you know what? Let's be a little bit more realistic. We will have a required rate of return of, let's say, 0.08% or 8%. Still doesn't do it for us, right? The problem here is that we have too much tied up in our net operating assets and we're not getting enough residual income, okay? If our net income changed, okay, let's just say for a moment that our operating expenses were $500,000. Actually, let's make it a little bit more realistic. $5 million. Okay? Look at what our residual income is. Our residual income's in the positive, right? So keep in mind as you work on your homework problem, you're not going to have a negative residual income. The way I plugged in the numbers and the way everything worked out, we had a negative residual income. That is possible. That could happen, right? And if it does, that means that the company's not doing that well, correct? Their ROI is, because it is high here, right? Our return on investment is 95%. But look at our net income. Our net income was much, much lower, right? It was originally 90,000. Okay? So we could see there that we have a negative residual income. If we had a higher net income with that lower required rate of return, we would have positive residual income. Okay? So the real takeaway here from this video is basically, number one, how do we calculate operating assets, average operating assets? How do we calculate margin? How do we calculate turnover? And then finally, how do we calculate the return on assets utilizing the turnover, the net operating income, and the sales? Okay? If you have any questions, please feel free to reach out to me. I'd be more than happy to answer any questions that you might have. Okay? So thanks for tuning in, and we'll see you Tuesday.